Remember when you believed in possibilities? Well, with the SuperTrust, you still can. SuperTrust is a new system of securities that allows you to trade the market index with a single security. It's specifically designed so you can tailor your risks and returns to your goals and outlooks. The SuperTrust consists of two open-ended subtrusts. One, the index trust, is invested in shares that correspond to the price and yield performance of the Standard & Poor's 500 Composite Stock Index. The other, the money market trust, is invested in shares representing money market securities. Both trusts terminate after 3 years. Each trust issues a security called a super unit. The index super unit is backed by a portfolio of stocks that tracks the Standard & Poor's 500 and is listed on the American Stock Exchange, which means now, for the first time, you have the flexibility of trading a significant portion of the stock market, as you would a single stock on an exchange. The other super unit, the money market super unit, is backed by a portfolio of short-term, high-grade money market instruments and also trades on the American Stock Exchange. This unit allows you to trade a money market portfolio as you would a single stock on an exchange. Each super unit can be held, traded, or separated into two securities called super shares. These super shares, listed and traded on the Chicago Board Options Exchange, have separate and distinct rights to the income and capital gains of the original units from which they were separated. The SuperTrust will charge separation fees ranging from a high of $15 per thousand to a low of $1.50 per thousand based on the size of the order. This means you can structure your portfolio of SuperTrust securities to emphasize interest securities, dividends and appreciation, greater capital appreciation potential, or downside protection. In addition, through normal American Stock Exchange and Chicago Board Options Exchange transactions, you can use the different super units and super shares to position and reposition your portfolio as your personal outlook and goals change. Brokers on these exchanges can be expected to charge usual commissions. The two units and the four shares become the building blocks of your portfolio, to be combined and recombined to take you where you want to go. Now, let's take a closer look at how the Appreciation Super Share works. Using this share, you can construct your portfolio to take advantage of the capital appreciation of the market. Although it receives no dividends or capital gains distribution during the life of the trust, it will, at termination, receive all capital appreciation of the index super unit beyond 25% of the unit's initial value. This means the Appreciation Super Share will be paid the final net asset value of the index super unit above $125. But if the index super unit's final ending value is lower than $125, the Appreciation Super Share will be worthless. Of course, in this and all examples, unit and share values must be adjusted for all capital gains distributions paid. The result is Appreciation Super Shares only do well if the S&P 500 portfolio market rises more than 25% over the life of the index trust. On the other hand, by relinquishing capital gains beyond 25%, you can assemble a portfolio with priority super shares that outperforms the market in all other environments, including market decline. This share has the right at termination to all the value of the index super unit up to $125, plus, throughout the life of the index trust, all dividend distributions less expenses. This means the priority super share will receive, in addition to dividends, the first 25% in capital appreciation of the index super unit from its initial value. Of course, if the final net asset value of the index super unit falls below the priority super share's initial cost, the difference will be a capital loss to the priority super share. Therefore, This share will do best when the index super unit is at or above its initial value, and lose value if it declines below its initial cost. Since a priority and appreciation super share can be recombined to form an index super unit, the price of the two complementary shares will tend to equal the price of the corresponding index unit. As the trust is open-ended, you can normally redeem this unit for net asset value every day the securities exchanges are open for business. The other super unit, the money market super unit, is invested in short-term, high-grade money market instruments and will be administered to have an approximate net asset value of $50. The two super shares will be paid directly from assets of the money market trust, but their actual termination value will be determined by the net asset value of the index super unit. The protection super share allows you to build a hedge in a declining market, since this share appreciates as the net asset value of the index super unit declines. Its payout, if any, is paid directly from the money market trust. At termination, the protection super share will receive an amount equal to $100 minus the final net asset value of the index super unit, up to a maximum of $30. Protection super shares, therefore, can act as a hedge against stock market losses of up to 30%, as represented by the index super unit declining from $100 initially to $70 at termination. These shares, therefore, will appreciate if the stock market goes down, but will be worthless if the index super unit closes at or above its initial net asset value of $100. The fourth super share, the income and residual, or I&R super share, provides you a better rate of return than a money market super unit in a level or rising equity market, but bears considerable price risk if the index super unit declines. Throughout the life of the trust, all income generated by the money market SuperTrust, less expenses, will flow automatically to the I&R super share. Additionally, at termination, it will receive the remaining net asset value of the money market super unit after the protection super share is paid its share of the super unit. But how exactly does this share provide you with a better return in rising equity markets than the money market super unit? The answer is that this share sells for less than the net asset value of the money market super unit, yet receives all the interest income due the unit. This means that if you are holding only I&R shares, your current yield will be higher than the current yield received by a money market unit holder. Plus, if the index super unit closes at its initial level or higher, the I&R super share receives the entire final net asset value due the money market super unit. Of course, if the net asset value of the index super unit ends the 3 years below $100, the I&R super share will receive only a portion of the $50 value of the money market super unit. The minimum net asset value at termination is approximately $20. Consequently, you can expect a higher return from the I&R super share than from the money market super unit if stocks are stable or do well, but have considerably less return if equities do poorly. As you can see, the SuperTrust permits you to build your portfolio from SuperTrust securities to emphasize interest securities, dividend and appreciation, greater capital gain potential, or downside protection. Importantly, all the payoffs are collateralized by actual securities portfolios which back the index and money market trusts. To see how the SuperTrust works, let's look at a few examples of how it can be used to achieve different investment objectives. First, simply by trading index super units whenever you choose, you can adjust your stock market investment to reflect your current outlook. Then, of course, you can protect this equity portfolio by purchasing protection super shares. On the other hand, if you want to create a conservative equity investment, you can purchase priority super shares to emphasize dividends with modest capital gains potential and then perhaps purchase protection super shares for additional safety in a declining market. However, if you want to lock in a specific rate of return, you can buy money market super units. Then, if you want to supplement this conservative position with equity potential, you can add appreciation super shares. Or if you want to increase your potential equity gain in the market, you can buy index super units and supplement them with appreciation super shares. Because the SuperTrust securities are traded on securities exchanges, you can easily trade among the 2 units and the 4 shares. The super units are listed and traded on the American Stock Exchange, and the super shares on the Chicago Board Options Exchange. This means you can restructure your portfolio with a phone call to your investment broker. Besides allowing you to tailor your risks and returns to meet your specific goals and outlooks, the SuperTrust provides you with several other important features. First, all investor payouts at termination are assured by actual securities portfolios. Second, using SuperTrust securities, both small and large investors can now buy the market as they would any single security. And third, the SuperTrust allows for investor appreciation and protection strategies without intensive trading requirements. Simply holding combinations of SuperTrust securities provide this benefit, since in most circumstances, no intermediate trading is required to adjust risk when the market level changes. So when you want the opportunity to shape your world, use the SuperTrust, the investment vehicle for those who believe in possibilities.